guys, this is Medzi. I'm going to apologize for my voice. I got a little bit under the weather, so I apologize for that. I'm going to try and drink some hot water with lemon. I have here a customer of ours who actually came to Optimus. We don't get a lot of customers that coming and visiting us, but Tom came here, flew all the way from Vegas, and we actually have his setup today. We set him up in the office for trading, and he's a great trader, and I wanted to kind of pick his brains a little bit about trading. So I'm going to interview him. He's going to give you his perspective. He's been doing this for a long time. He's very experienced. He's got a very unique way of looking at the markets. So I want to ask him questions, and at the same time, you're also going to see the software that he uses and what he recommends. And in the background, there's Bloomberg. Unfortunately, they canceled our Tom and Jerry subscription, so we have to watch this. Okay, so now we'll get started. All right, Tom. So welcome, first of all, to Optimus Futures and the Optimus Studio.
Thanks,
Awesome having you here.
Really glad. I'm glad to be here.
Awesome. All right. So tell us, how did you get started trading in general, and then how did you get into futures?
Sure. I will try to be short. I started trading when I was 16, back in Europe. I was too young to trade my account, so my father opened a brokerage account. I asked him to open one. He's a doctor. He couldn't care about stocks back in the days. It was almost like a strange thing to do. And I was trading beer stocks because that's the only thing you could trade in Poland and actually be successful. There is no continuous quotation. So you had to wait until the day was over to get the final closing price of the day. And I would basically sit in the office with a bunch of people, older gentlemen, most of the time, and I would wait to see where the prices went. So I was hooked from that day. I always liked numbers. I always liked trading. At least I believe that's something I can do in the future. And then I followed up to take statistics in college and started following that site. And not until I moved to the States in the mid '90s, where I started pursuing trading more professionally, and I joined a local proprietary trading firm out of Los Angeles, and I started trading stocks full-time at the time. But I guess futures is what we are talking about here, and I was really interested in futures because I was watching the SPOOs or the S&Ps every single day as we trade. So you would watch that as a gauge, as a proxy to everything we do, and eventually I asked myself a question: why can't I trade the actual index instead of trying to trade all these stocks and try to chase the market all the time and always be, do I go long, do I go short? The market is long and I'm short, maybe it's not the right thing to do. So naturally, I discovered futures, and slowly, this is like late 90s, and traded.
Actually, my father, when I was a kid, he also traded stocks. I know exactly what you mean when the market was not very liquid overseas, right? So you couldn't intraday trade it.
You couldn't really get out. You basically
there
were
was just settlement
in the dark.
Right.
You were in the dark in a sense, and the floor brokers were making the most amount of money because they had the order flow. The floor traders were seeing all the orders are coming in,
right,
but we were not participating.
Okay, so then you went to stocks in a prop firm, and from prop you went to index. Tell me a little bit about the transition you had. I'm sure a lot of our viewers want to know about the transition from trading a leveraged product, a non-leveraged product to a leveraged product. Was it smooth for you? Was it challenging?
That's a great question. Actually, back then, trading stocks was a leveraged product. I mean, we were using leverage, but it was a firm's leverage.
Yes.
It was a LLC level. There was a couple of investors that came in, but a lot of things. Many things changed, since the Dodd-Frank and things came in, and now you cannot trade the same way. The biggest challenge when I switched to futures was that I realized that I'm focusing on one instrument. So I was getting bored really quick because I used to trade so many opportunities a day. So I realized. And
a lot of setups.
I was scalping
a
lot of setups, and I trade a lot when I trade, or I used to. And I was missing it. I'm thinking, oh my gosh. So I naturally became even more active as a scalper. I would be in and out all the time. But I've got hurt because you can trade all the time, right? You have to find the right periods to trade, your setups.
Yes.
So I was forcing trades. So I didn't do well for the first year, or even 2 years, or even 3 years. I had good months, bad months. So I was pretty much coming out slightly negative, to say the least. For the first 2-3 years, I'll be honest, I was not happy about it, but I didn't go back to stocks because I know traders that are successful at the time. Actually, some of them came to our office at the time, and I'm going to drop a name. The person that is considered till this day one of the biggest S&P traders, Louis Borsellino, came down to our office, and then I followed up. I came out on the floor, just as a rookie, just to see the floors. I was swept. It's just beyond what's happening on the floor. And when I saw this up close and personal, I realized that what I'm looking at here is so much more elegant. There's so much less stress because you're battling the price. You're discovering the price instead of being hit in the face when you flash the order and you didn't fill it. And then at the end of the day, you're going to meet the person, outside, and you're going to talk really strong language because it's so much emotion on the floor. This is easier, I found out. So I said, okay, I'm not going to give up. And after that, slowly but surely started listening to all the books, and I took a bunch of courses and talked to some traders that are very successful. And I couldn't find any of their approach correct because I did exactly what they said. And I was like, it's not working. So I realized it's all about finding your own language with the market, but use the tools that they use, but using yourself. So you and I look at the same chart and we see completely different story.
Totally.
And that's the beautiful thing.
Right.
I'm so sorry about your voice. I mean,
listen, it's all good. You're doing most of the talking, so that helps. Okay, so you went through your challenging period, and then you decided to go full time.
Right.
Tell me about this transition. You went through the challenge. Now you're going full time. What is the challenge in going full time? Just focusing on the S&P.
Great question. The challenge to go full time is that if you do not make money this month, who pays the rent? What do you eat? So you have months where you literally take out money out of the account, because I was in that position, to keep living, and I wasn't making money. So I started using these psychological tricks to say, you know what, if I was running a store, I would have expenses. So I have 3 employees, I would have a lease, I would have maybe products that are turning bad and I'm not selling them. So I started visualizing how much it costs to run a business, and that's what saved me psychologically, because there's months and weeks where you don't make money. It's at least for me. So going full time was a decision where after 3 or 4 months that I was doing very well, I decided I have to go full time at that point, and of course the first month, bad month or challenging month. So it's almost every single thing that you hear in the markets that happens, it happens to you right when you commit to it. And it's ever since the same thing. It's this crazy market rhythm that whatever happens in the markets is one thing. However we project our fears onto the markets happens in your life. If you feel fearful in a position, get out. So I'm already going maybe further than your question, but going full-time was a challenge from day one. But hopefully I was always recovering, because every time I went bad, 2 big sides every single time. It's always the case. Because if you have too much size and the setup is good, you will get shaken out. So you don't have the holding power. If you have the right size, let's see, 1, 2, 3, 4, 5 contracts, whatever you can trade, you will most likely withstand that risk that you have designed for the trade. So if you go bigger because you think, this is the trade for the day, you find out you're wrong. And it's only 2, 3 more turns when you could have been in it. The would have, could have, should have always cost money. So it's not an easy business.
Agreed. It definitely not, and it's not for everyone. I want to take you back a little bit to what you were talking about, the books. You're slowly transitioning from trading stocks to futures, and now you're going full time. I'm sure at some point you were overwhelmed as far as all the information you received from all the people. So I think what traders try to do, or our traders I think trying to do, is simplify things. How did you manage to simplify your method? What did you eliminate and you say this is not necessary, this is what's necessary? How were you able to just get it to basic rules to trade the markets?
Great question. After many, many years of doing this, I'm looking at things that I personally found useful, and I went through so many different indicators, like everybody probably in this business. I went through different charts, long-term, short-term, tick charts versus minute compressions, and right now I can maybe go over some of the things I'm looking at, but I found that the simplest strategy or the most simple approach works because you are in control at least of that. You're in control of what you're looking at. In other words, if you have 5, 6, 7, 8 sometimes confirmations to go through to get to the trade, you will first of all be wrong all the time because you're wrong in the markets all the time. You have to control your risk and be correct when you're correct and just hold on to the trade. But if you have all these confirmations, too much information didn't work for me. Simplifying was a necessity of the trade. In other words, I realized I was so tired after many days and weeks and months of trading. And at the end, when you look at your statistics, which I happen to kind of study my stuff, which is really helpful, because you look back and go, my gosh, what was I thinking? What was I thinking? What was I thinking? But you don't think like that when you're on a trade, you're looking at your P&L and you get excited. You're buying a new Porsche today and tomorrow you're looking for a barn to live in a sense. So it's really hard because it's always in front of you and simplicity works. So I simplify it. I look for volume, VWAPs. I like volume a lot because volume is one of the traces that shows you what's happening. And I kind of divided my attention to volume-based indicators in general and other price-based indicators. And some of them are so simple that it's not what it looks like on the screen, it's how I interpret it, what it does for me. And volume to me is leading indicator in a sense, because even though volume just happened, like trading volumes, or accumulations of volume, which is the product that I very much like to use, Bookmap, is very helpful in interpreting accumulation of volumes on both sides of the market. And when you see it real time, visually, it will help you stay in the trade. The most important thing is, I'm convinced I should be short. Why? I'll give you 5 reasons. But the one major reason is volume. Second reason may be conversions or divergence. Third, maybe there is very bad news in the morning, big fundamental news that basically makes the market keeps dropping. It's not 3 traders, it's not a hedge fund, it's not a one machine. It's going to be a big news. I'm not a fundamental trader, but when you know there is a feeling for the day and you see that there's just lower lows and lower lows, you'll be a fool to try to come in and hold the S&P market with your 10 contracts.
I think what you said before is really the key. Because it's when you look at your trades after you trade objectively in an Excel spreadsheet, in the trading journal, I think that's when you start saying, you know what, this is when you don't go based on your intuition on what's right and what's wrong. You base it on facts.
You look at the numbers.
You look at the numbers.
Hardcore. It's naked. It's
people,
brutal. It's brutal.
And then you realize on the bad days what you use and what was not necessary. Simplifying it, saying, you know what, I could have done this trades with these tools or with those tools, or I've made those decisions that were good only with these tools. I didn't need all that, right?
Right.
I think
it clouds your vision. Too many tools.
Right. Beginner traders thinks the more tools they have, the more it lines up, right? So if all
because things line up all the time,
right.
and it's actually you're right. It's
a
whole subject for a new show.
Absolutely, I think more opportunities are being missed when you have gazillion, when you're trying.
And you get upset because things I really like is actually I divide. You asked me about how I simplify myself or my approach. I look at 2 general time frames. I either trade 2-3 times a day, big turnarounds, big bottoms that I'm looking for a bottom. That means you don't just trade every bottom, you're looking for those patterns. Or if I feel that the market's really choppy, which if you can establish that and you're correct, then you sort of market make. You're on the offers, you're on the bids, you have a lot of orders in, and then you just use the mean reversion, which is really helpful if you are in a choppy market. Because then you print money while you're at it, because things go back and forth without direction. People who are looking for breakouts on that day will find that they're funding our side of the trade. So if the market's choppy, I try to get more aggressive and I have more smaller trades. But when I feel the market is expanding, then I'm putting on a short-term momentum trader cap, and then I get busy with everything from Tetris, making phone calls. I don't know, there's so many things you need to do. I'm not trying to be funny, but you have to be away from the computer or be around and do other things, because staying in the trade is really the most profitable thing to do. With a stop in place.
Agreed. Okay, we'll go to the next question. Before that, just a risk disclaimer. Stops are never guaranteed to get filled. Right? There could
Market
be gaps.
conditions.
Market conditions could change.
There's no guarantees in this business,
Right.
for sure, ever.
Okay, let's go to the software that you use. I'm very interested, in how you look at the software, why you like the software, and basically, I'll let you do it. So I know there's a bunch of software that you use. Let's go one by one.
Sure. Okay, well, since we talked about volume earlier, let's look at what is called Bookmap. It's I think, one of the best programs out there interpreting volume in the markets. For example, this one here, you have a traditional chart, which is obviously candles in my case, and for at first glance, it looks extremely confusing. And I remember it took me a couple of days to just adjust, what am I looking at? But basically, the areas that are lighter and yellow, which I prefer to have, they stick out. These are the areas of volume accumulation at the time of in time. So, for example, right now, if you're looking, this is actually real-time S&Ps. We just had a huge drop in here. So, other than seeing regular trading volume blocks here on the bottom, which everybody's used to, which is very important to see. Like, for instance, here, right, you're looking at this volume here. If you didn't have that volume, you would not know that this could be a turning point. Why? Because there's a huge block. It could be a big buyer who's getting faked out by the other side, who's shorting. So it doesn't really, for me personally, I don't try to find, is it good to buy or sell? Because that's very deadly. Because I've noticed that to be a loser's game. If you try to think there's so much support, I definitely going to go long. I don't do that. I look for super big volume to know something's going to happen. That's how I look at it. Because you can do two things, right? Like, let's go back to this point right here. Like right now, what I'm looking at is there's a huge amounts of bids right around here, which is 1350, and we're trading at 2819, so it's still 7 points in the S&P. This is giving me a little room. So if I'm a buyer, for whatever reason, I will be feeling somewhat comforted that up until that point, that bid is going to hold me up. Now, everybody knows that the volume could be a temporary flush of volume or not. But this is the good news. If you look at this particular software, that's what I like about it, and I haven't seen anybody else do that. They not only show you the current volume that it traded, but they show you in continuation what was it on the offer, on the bid, at what price in time. So I can go back in here and see that this bid has been consistent for the last, an hour or two. So there is a real potential bidder in there. That's important. Because this will show you here, okay, you have a big volume. Well, I actually was shorting. I was short today for the last hour and a half, and I just covered before the interview because I don't trade when I'm doing something else. But I was waiting, and not until this point, that big volume told me I'm either going to get stopped out because this is a huge volume. And why is this big volume? Because right here, you see all that yellow. This is a huge accumulation on the offers. And once it got to it, there's a wall. And the question is there enough buyers that will get through these stops or this is limit orders? Or is it a big guy is going to keep selling? And in this case, it was a huge top. And I was short from this area. So I didn't like this at all. But I knew that because of this huge accumulation area here, I was okay until probably here. And of course, then you have a stop and you get out. Another thing, this is a classic example of how not to play stops, at least in my case, or in my personal view. Typically, people that look at charts, they would look at the candle and go, okay, what is this? 28, 20, 25. Good. Let me be a wise man and not lose any more than a tick. So you're going to place a stop 28, 25 and a quarter, which is ridiculous because that means your stop will be hit almost for sure because even no computers needed. Everybody's going to run at least one extra tick. Look at this attempt to break. This is called stop running. I can see it from a distance. Whoever was on the buy side, was running the stops. Why? Because if you're a super big trader or a group of traders, you need the wrong side of the market to print in your position, in your direction, enough for you to get a big size, and then on the first big downtick you get out. If you go in a marketplace, right, and you start printing your own prices, you're dead in the water. Because you cannot go in there in a lower volatility, no volume environment and start making new highs because the price will run away from you. This is the safe way for big guys to play. So my point or my advice, it's not even advice, it's what I would say, don't have super tight stops because that little tiny stop here would get killed by 1.5 points here. But because of this bookmap situation, and look at this, you see that volume here? It's been sitting there. So people can say, our guests or, the viewers can say, oh, really? Interesting. Well, what if it got there? What if it got there? It would probably print some more. And if it continued, I would then get stopped out. Yes, I would lose maybe 1.5 points more. But why I didn't get out? Because this gave me the comfort that I will not get stopped out until this level gets cleared. Now, this visual thing is so helpful because if you look at the dome, right, the only thing you see here is volume histogram. You're going to see what has printed already, which is hugely useful. I use it a lot. Those are magnet points, I call them, or points of control. So if you have a trade, this is the market right now, 28.1625, you know that this price here will attract in the next probably 30, 40 minutes. I'm not going to bet on it, but if I was trading right now, I would be short. Why? Because this is a magnet point. So here's a chance to make 2 points. And because the market's closing and there's no big, we'll see. I think it's going to go down. So that's one of the ways. But what you don't see is how long big orders stay in a book like this. So my stop was about here. And this saved me from getting out of the market. I basically bookmap actually, saved me from getting hit. Don't you think I would get stopped out here like 100%? 10 times till Sunday, because what I'm thinking, oh my gosh, maybe Trump decided they're not gonna charge Mexico for the next 3 days. This will be a crazy bid. So the scary part is this could be a frivolous situation because tomorrow he may change. I'm not saying political messages here, but the market's gonna react. That means nothing else other than I get stopped out, my short doesn't make money, and I get frustrated. Second worst thing, I come in here, start shorting. Too late. I should have been covering my short that did not get stopped out because of this. So long story short is this is useful. And I like it more and more. In the beginning, I admit it was a little, for instance, what you can do here, there's ways to make it even more crowded. Like some people have it like this. Okay, not my cup of tea. Why? Because I cannot see what's going on. So the trick is clean the fat from your chicken. Make it lean as you, and that's pretty much what the trick with volume is. Bookmap, very helpful. Now, another thing which I normally don't discuss, I'm a trader that comes from a technical background. Statistics, so I'm looking at, things that are the numbers. The price is what I do. However, over the years, I always wondered that some days, even though everything looks like a big good buy, big support, the market gets wacky for a little bit, out of nowhere. Stops get hit. I get completely what's the end of the world coming? It's called the news that everybody's expecting. Not the FOMC, because that's the one everybody knows. But everything else, the beige book or the trade imbalance or all these numbers that are already ahead of time booked, they're going to come out at 8:30 or 5:30 in the morning. And this is something I don't per se trade off as much, but I want to know when it happens. So I pull my offers out. No trades if possible. Let it flush out of the system. Market comes down. I'm back in the markets. And for that, I use. You guys have a fantastic product here, which I like.
Thank you.
No hard feelings. It's great. It's visual. It talks to you. You can have big tweets if Trump is tweeting or if Elon Musk is tweeting, something that makes markets move.
You can send alerts.
Yes,
by the Twitter
visually. Yes. And it will actually tell you. So when you're trading, it's useful. Now, what it really does also, it's good on the phone. So what I do at night before I go to sleep, the last thing I do, other than probably, do my, night routine, I go on and check what's happening tomorrow so I don't forget that at 7:30 today was crude inventories. What does that mean to me? If I'm in crude, I'm going to show you a chart in a second. I would not know not to be in the market at that time had I not remembered 7:30 crude inventory. And this is happening 3 times a day. This is not a big deal. It's like a couple of things. So today, if you look back, it's a very nice visual. Reminds me of Bloomberg. Whoever designed this is fantastic. It must be a good team of designers because it's super accurately on time. The second the number comes out, a second later, it gives you, if it's stronger than consensus, if it's stronger than the last releases, it's really good. And if somebody wants to go deeper in it, I'm sure there's a way to trade off it as well. But you have to be super fast. So you have to be probably more experienced to do that. But here we had, 730 crude oil inventories came out. If there is 3 exclamation point here, it tells me that this is a general massive impact on the market if the numbers, and the number came out much weaker than anticipated. And let's look at it and see what happens. So let me pull up the...
So now we're looking at Sierra chart.
I was about to say, yes, this is Sierra chart, which is favorite of mine for all the reasons. You can place your trades from here. The super flexible charts. I'm a chartist, so if I cannot do this to my chart or make it like, if I want to zoom in and do anything super tricky, I can go up and down, left and right. If you trade, I need to visualize the current setup. I want to see the prices. I want to see, is it bouncing or is it bouncing a little bit or not? This is important. Not every charting package does that. This particular program runs on Arithmetic, which is really probably one of the best data that I...
So is the Bookmap.
So is the Bookmap,
right?
Which is really solid. There's a lot of good products. I mean, good feedback, feeds. This one I happen to find so far side by side, super accurate, even in times of high volatility. So let's look at this. Okay, let's run a quick scenario here. All right. Okay, I'm giving it away. Does anybody see anything suspicious on this chart? Bloody hell. 7:30 on the dot, this took place. Do you think being long on this breakout will kill you? The heck it would. It went up, didn't even break out. It was close enough. So let's say you're a wise man, you want to go in just a little bit earlier. It's a nice, what is this, like a cup and handle information. There's so many things you can see. This is probably going to break out.
Most people see what they want to see.
They want to see what you want to see. Cup and handle, a hammer and a nail, whatever you call it, the price will move where it moves. What I was saying is that before, I was ignorant for many years, and I got hurt by not knowing what happens sometime during the day. If I was not aware of this, and I was long here is what would happen. I'll be honest. This is years of experience. The stops usually get placed right after you get in. Right away. Okay, let's call it a couple of seconds, maybe 20, 30 seconds. Let's say I went long in here and it's looking pretty good, like a solid breakout to me. By the time you realize what happened, this is 2 minutes. First of all, you think there is a back print. So you probably will be thinking, oh, this is probably not correct, because the second you got in, you're down here. Then you go, this has to be a mistake. You're placing your stop manually, if that's how you do it, by the time it gets in here. You're in full panic mode. First of all, you're thinking, why did you buy this? Is there a problem with this? All you have to do is look at your fundamental news update, and you maybe either not be in a trade, maybe you can do an option trade, you can do a straddle if you want. There's so many ways to skin the cat.
What you said is not only, there are also swing traders, and so there's day traders, you're a day trader, and there are swing traders who keep their positions overnight. For them, all the news that come out at night are important now. News can come out of the ECB.
Sure.
Right?
Oh, it's correlation across the world.
Right.
Sure.
Germany could release something that affects the DAX.
Big time.
That affects the ECB.
And they need to know that. So this is, I was talking specifically day trading. Correct. If you're swing trading, you need this because this is probably your 20% of your position.
So day traders would need it for the North American markets. Day traders in Europe need it, but you have to know what's going on the other side of the globe if you're a swing trader.
Correct.
That's great. So just a question.
Sure.
You execute your trades on Sierra.
Yes, I do.
Tell me a little bit what you like about it.
Okay. It's gonna sound strange. There's everything about it I like. Because number one, when you trade, even though I have this gaming computer and it's Asus, it's whatever the model is, it's the best I could get at the time. Things lag your computer. So if you're running a couple of softwares, which most traders do, you better not be running something that's super heavy on your thing because it will slow your trades. You're going to be probably the last one to get executed, and it adds on. After a year, if you're always late, here is your bonus. So this particular software, even though it has so many bells and whistles, runs thinnest of all of my trading softwares. All of it. Like I can pull up right now and show it, but that's probably not the time for it. But there is a way to basically go, how thin could it be? So it's built well. Secondly, if you're looking at a chart and you're used to a certain layout, what's the fastest way to execute? Well, obviously, you have a ways to buy and sell right in this trading window. You can buy market, sell market. Now you can add quick things like, targets. This is also not the time to talk about it in detail, but instead of just buying and then adding a stop, you can come in and buy a bracket order. You can do a lot of things, simple brackets, and all this is pre-custom built, and then all you got to do is just fire it up. So when you buy, you always want to go buy market, stop at 2 points, and maybe exit at 6 points, so maybe 3-to-1 risk to reward. However, I don't use it. This I use usually only if I am in a get out now, something's not working out, I have to clear. So then I mark it. I usually don't use market orders, almost never. I always use limit orders, which is the best way to get improvements on the price, because after all these years, I realized markets retest so many times. So if you think you can have a breakout, you have a price in mind, why don't you give yourself a bonus of a half a point, go lower, go even point below, and you'll be shocked how many times you get hit. And it doesn't mean it's weaker. It means the market is whipping around if you're still bullish in a position. So that's why I like to use this, which is a very nice way of, I call it a dome, hybrid dome. That's my internal word for it. Classic dome, which they offer like this, is what everybody's probably used to in the futures industry. You can come in and you just place orders. I click. This is a simulated account because I don't want to have a live account when we're talking, so I don't trade by a mistake here. But you can place your trades in here, but instead of doing that, I come in here, and here's what happens. Let's say I bring the chart to a current price. First of all, I love the fact that I see an immediate volume within the closest prices here. So I can see, while I'm not looking at Bookmap, which I always have open here in the site, because I kind of make sure that I don't watch too many things, so I'm looking at this. So right now, what do I see? I see some offers here on the Bookmap. And these offers are basically, if you look closely, are these prices. So this is not any magical formula. It's basically more accurate representation of what the market does. But here is what I don't see. And this is, I think, if I have to be very, very lean about why Bookmap is powerful, is because when you're looking at typical volumes here on Sierra, which is great, it's a current book. It's a limited book. So I see offer here, big offers here, and a smaller here. That looks like this over here. So it's a very similar, but if I go back anytime, 5 minutes, 10 minutes, I can see what it was before. And guess what? Do you see this is gone? Do you see that big thing that we were looking at? It's gone all of a sudden. That huge order that was holding the market is gone. And let me go back to it for a second, if I may. What it tells me, that whoever was doing this could be a complete fake order, was holding the market. It was capping it. It was capping it. Somebody maybe who was really selling here and here and here, that was their big, like keeping the market on top. Once it flushed here and they got out, they're kind of gone. So you can see how not every order is real, but it's sometimes enough to influence the market for the time being. Back to Sierra chart. This is a dome, if you will, which works like this, right? Let's say right now I don't know, let's say I wouldn't make a trade right now. Why? Because there's no extreme prices. We're sitting on the moving averages, by the way. So this is, if you're trading right now, you must be out of your mind, generally speaking, because the price is not going anywhere for the time being. And this is just speaking of trading. If I'm going to go low right now, that means I'm gambling. If I'm going to go short, I'm gambling. I personally like to see extreme prices generally. So then you have the friction. And when you have the friction, that means the follow-up could be a big price move, up or down, doesn't matter. When you're in a chop, the only trades I'll place here, it will be probably a couple of offers here and a couple of bids right here. So I'm in a simulation, let me show you an idea. I'm not going to trade, but just to give you an idea. I can go, okay, I want to be offering, this is actually oil. So I want to be offering here. You see? So you place orders directly from the right on the prices. So all these, then you can move them, like you can go like this. Let me get out of this bracket and go to a simple trade. Okay, so let's say I want to place an offer here. You see, the second I click, I don't have confirmations because I want to be in the market. If I'm clicking, that means I want to be in. It took me a second to place an order. Now, I want to refine it. So you grab, left, hold, click down, and you move it around. So let's say I like to be bidding, offering 92. You're going to move it like this, that fast. Now, at the same time, I want to place a couple of bids because I'm assuming the market's choppy. So I think it's going to go up and come down, go down, go up. So I'm going to click here. You literally click on the prices and you're in the marketplace right away, your orders. That is something that, and it's super visual. Let's say that right now I want to get closer to the market here. So I'm moving my offer and I want to go 2 orders, two contracts. You just click 2 and it's over. You can go here, it's over. Now I have shorting 2, buying 2. So this is sort of like market making.
Nice.
And it's simple. Why it's simple? Because it is all within one integrated software, and that's why Zero Chart is fantastic. I mean, in a nutshell, it's easy to understand why many traders, professional traders, some of my colleagues using it. So
excellent. Okay, let's talk a little bit. We're getting here towards the end. Let's talk about. Tell me your view of risk management. How important it is in trading. How you found your way to implement it. In the markets. Particularly, I like to know when you're with your risk management approach. Are there times that you are in a trade and you realize that market conditions have changed? So even if your stop didn't hit, you get out. Tell me your approach to risk management as a day trader.
Great question. That's probably one of the most important things that makes us and breaks us. The risk management behind what we do.
Right.
So the question was, I guess first part of the question is how I use risk management, how I apply it. Generally speaking, I like to use percentages, if I say that, because it will make a $10,000 portfolio similar to $1 million portfolio, at least in a relative basis. And if you are risking a percent on a trade, which is considered a decent risk, that's probably doable. Generally, if you go 2%, 3% per trade, anything north of 2 or 3%, you better be a swing trader because that means you need to make 10, 15% if you're correct. So there's people taking 10% risk, but that's really crazy or risky because it will take 10 times for you to blow up. So I like to keep my risk at 1% per trade on any given day. If it's less or more, a little bit, that's okay. I call it literally force the risk management onto the marketplace by doing this. If I'm risking a percent, let's say, I don't know, it's 2.5 points or 3 points in the S&P, I will not ever place a target to get out initially, at least that is 2.5 times more or 3 to 1. Now that means I'm forcing, if I'm correct, every other time or whatever, 30-40% of the time, which is low, but typically most traders I find to be correct 50% of the time, 60% of the time. Most of the time you're correct just a little more than every other time. And how do you make money? Well, by keeping the risk-reward ratio in check. So if I'm risking a percent, I want to make at least 2.5% on the trade. Okay. That's classic setup. And the way you do it is, the way it's beautiful is because once you take the trade, you are in control. Where do you place your exits? And that's the big important message to every trader who is maybe newer. It's not gambling, because there's a huge question of how is gambling not the same as trading? And it's not, because when you sit at a table, any form of table, you place a bet, and you cannot change. Well, maybe poker. Let's just look poker for a second. But you have to place the bet. You cannot change it once when the wheel is spinning. It's over. So the outcomes are preset. In trading, at any given time, you can remove your order. You can make it more profitable. If the market moves in your way, you increase your winnings. You can move your stop, which is ridiculous because the stop is supposed to protect you and lose no more than %. It's boring to get stopped out, but at least it's a little pinprick. It's okay. But if you move it, okay, how about chop to hand? And then when you're down the hand, you go, the arm is okay. I'm still only 30% down on the account. I mean, I've seen it. I've done it sometimes with smaller accounts. It never works. You eventually shut the account going. So the risk management, I try not to ever change it. But when the market changes, and that is when the volatility changes, and this is very important, I will move. Okay, in a perfect world, I should reduce the size. But I am already in the trade, right? And now the vol goes crazy. S&P all of a sudden goes through these huge cycles. Now you should technically, in a perfect scenario, reduce the size or extend your stop and extend your target. But if you do it with the same size you already have, all of a sudden your risk goes 4 or 5 times, which your normal risk is. So reduce size, be proactive about it almost every time. And it's not easy because we all make mistakes. We all think market's going to come back. Just give it a little time. It never works. It's almost market always knows.
I agree with you. Things that
boring subject, but it's so true.
Successful trading should be boring.
It's right. It's a boring. Pilots. It's the most boring job. They love only. I have a few friends that are pilots. Really quick. They love only 2 things when they fly. Right before they take off, when they floor it, full throttle, and when they land. Everything else is robotic, automatic. They would rather be sleeping or having gin and tonic, but they can't because they're flying. It's true. It's just the nature of the game. Yeah.
Right. You're right. I mean, there's a lot of things that happen to traders when they remove stop losses. They don't want to get stopped out, right? But this is behavior that's common to a lot of beginners. And they think they're the only ones that it happens to, that psychology process.
It happens to all of us. And it never changes, guys. It never changes. It's almost the biggest traders, and some really big traders I know, they get hurt too.
Right.
And they've done it for so long.
You know what?
It gets us all.
It gets us. And what I've learned in trading, there are no intelligent mistakes. Right? There's no intelligent mistakes.
You called it.
You know, even fun traders, you know, sometimes they fall in love with positions or the way they do things, you know. So, last question that I have is, you know, you obviously know a lot. You came a long way.
I'm a little passionate about it, if you can tell.
And you love it. So tell me, what advice would you give to a beginner starting out, a little bit overwhelmed, where to start? You know, how would you, if you take yourself back 20 years, right? And say, you know what, I wish somebody told me this. You know, say this now to our new traders and to help them out in a kind spirit.
Great question. Honestly, realize that you need a game plan. Number one, you have a game plan. It's like you don't go join professional sports, no matter how good you are, unless there's a coach, there's a game, there's rules of the game, rules of engagement. Have a game plan. The rules better be simple so you understand it. And when you start, you cannot know what, for instance, I know after all these years, until you go through different software. So there is a learning curve. Be okay with that. Take your time. Take Bookmap, take Sierra Charts, if that's something you want to do. Take your time. Maybe join the forum. You guys have a forum, which is wonderful. Right. I would like to try to be
By the way, Tom if he contributed, I talk here, right? He contributed a lot to our forum, to community, that optimusfutures.com. Added tons of content about the platforms, and I can be grateful of his. And he has a trading journal, so you can all go there and ask him questions. So,
yeah,
thank you.
No, it's my pleasure. It's just like, first of all, I just wanted to say one thing. You're a really, really good guy.
Thank you.
I've been, you know, when I was researching on you, and I asked some colleagues of mine, they really spoke highly of you. And you really care about traders. You give, like, I must have gave you so many questions. I bombarded you with questions, like rookie questions. Well, how can I get this? Or can we get better commissions? And I'm thinking, gosh, I sound like everybody else. Everybody wants something, and you deliver. You went through it patiently. I've tried different softwares because I like now what I like, but some of them discovered through you. Like, and I'm really excited about that you have guided me after all these years to a place that I'm technologically in the right place. The fees are insane. You know, the commissions, I'm very grateful. You know, it's a great shop, and I'm glad I'm here. By the way, stop by your office, and you know, I even made a couple of trades today. Pretty good, solid, you know, fast internet that works. All of your team, by the way, Very nice people. So I think you're running a great outfit.
Thank you.
I'm hoping you're going to be in business for another 20 years because
I appreciate it. Well, we all start somewhere, right? We all start somewhere. And I know when I first saw commodity quotes, the first commodity quotes that I saw were grain quotes with the quarters. And I wanted to put a pencil in my eye, And I remember there were so many kind people out there who explained to me, it's quarters and it's a full point. I try to pass the same tradition, right? I find that, our edge at Optimus is understanding the software we support, right? So Bookmap is not unique to me, neither is Sierra, but understanding the software that we support for traders.
It's unique because it's unique to a person who seeks it. Like I noticed you do one thing very, very well. You listen. And that's unusual in this business as a professional broker. You listen, because I remember I asked you a few things, and you listened, and you gave me the tools I was looking for, and that's why I'm trading with you guys as well. And I have other brokerage accounts, and I'm slowly and surely finding myself trading more and more with Optimus. Why? Because I feel comfortable, and you're always available.
Thank you.
Maybe you should get some sleep because your voice is like like I feel bad. I really feel bad for you.
Tonight I'm gonna sleep.
Yeah.
Well. The thing is, with all this, I know the traders today are really overwhelmed. So I listen to try and minimize cost. That's number one. Minimize the cost of execution and minimize the cost of data feeds, because we have people, they have CQG and Rhythmic and DTN.
Endless, it's so much.
And I was like, you don't need all of that. Here's what you need. Here's what it is. And at first it's hard for them to accept it. Because
people think they're missing out.
Yes.
You're not missing out anything. Okay, let's put it this way.
They're not missing out.
Okay, what is S&P trading at right now? 28, 27, 50. How many different softwares make it look different? It is what it is. It's the price. You can trade it. But the thing is, then, like for instance, this software, Bookmap, it interprets the data that everybody has in a certain way that is helpful. And you can make faster decisions. And if you win by a few seconds, you have a huge advantage because you don't get shaked out. Because markets in 5 to 10 seconds can whip out, hit the stops and come back. If you have a way to delay your reaction, that's what I would say that good software will delay your reaction a little bit. Because most of the time I notice that two sorts of pain in the markets, generally speaking, let's just call it how it is. You either get stopped out early and it goes your way. There's nothing else. Every trader, I don't care what you trade, pork bellies. You can be trading Singapore. Or you basically get out too early. Leaving money on the table is more painful than losing money. It's ridiculous because it's what you could have had. Like, oh my gosh, I could have left that trade for 3 more hours and my gosh, I'll be able to afford the door for the Porsche.
It's true. Yeah. It's true. I think that when you look for software, you have to look for the 10% of the software that you're going to use, right? Because everybody, you can't use everything.
Bare bones. Yeah.
You have to figure out what you're going to use for execution.
And specialize.
Right.
In that execution.
And if you like it, now different people they like different visual displays.
Sure, exactly.
Right. So
find a software that you can tweak to please you.
Right. I have certain preferences for a software, the way it looks. Like more modern look, so that's the way. But at the end, when it comes to execution, I look for the 10% that I can execute on. Usually beginners, they usually say, is this software better than this? Or this one better than this? And there's no such thing. It
golden words.
Right.
There's no better software. If the feed is the same, then it's just different look and
there could be some things in execution that could be different,
or
things that help you with the visual display. But I noticed that you have to individualize it and not follow hard, right? Because a lot of people ask you, what do most of your customers like? And I say it doesn't matter.
That's a valid question. Everybody wants to know. We're sheep, generally speaking, in the markets. If everybody's using it, it must be good. Have you heard of Amazon? It must be good. Everybody's using it, and everybody's got their problems with it.
What I do, I tell them, when they ask me that, I said it doesn't matter. And I ask them, what are you looking for? What do you need?
That's exactly. What do you need?
Yeah, what stage are you at? And then I recommend, and I always tell them, look, as you grow as a trader, you will figure the next step. If you're on one platform for, let's say, a year, trading real live money, and you would go to a different platform in a year from, completely different, you will find that the transitions after trading on one platform for a while to another one are not that overwhelming, as opposed to being a beginner and trying to use three at the same time.
So true.
You know,
because you get clustered.
You didn't learn anything.
You're missing where the price is at because you're hopping. I mean, all of us. I sometimes realize, like, I used to trade on 6 monitors back in the days, then reduced to 4, then reduced to 2. Now I get away with the laptop if I'm traveling, and if I have to, I will trade on my little phone because I have imagination of what it is. What am I looking at? And the thing is, everybody has an imagination behind your trading approach, and once you visualize it, I can call the broker for crying out loud. I can call you and say, get me in, get me out. But I will pay extra for that, right? Because not always. But
if something,
you know what I mean,
right?
Yeah.
I mean, our support desks are, if you're stuck on the internet went down, you're stuck on the road.
Sure. Yeah, you're always available. Right? You're always available.
Me and my team are always available.
Yeah.
I guess that's it, right? Thank you for your time.
My pleasure.
Thank you for stopping by, and thank you for
accommodating me and making me sit in this beautiful office.
You know what?
Your office is fun. I love your company.
Thank
it's really
you.
Nice, really.
Thank you. You know what?
I feel at home.
It's nice.
Strange. It's a strange feeling. Because it's a game. It's a trading game, and we like this game. All of us.
The truth is, we don't have the privilege of meeting all our customers. Everything is done online. The applications online, platforms online. Everything we just used to that sort of. We got used to that sort of a relationship with people, right? But
sure.
But if they're in Florida, if you guys are in Boca, hey, listen, pleasure to have you on board.
The only thing missing is a boat slip outside of the office. That would be just too much, right? Thank you, Matt. It was a pleasure.
All right. Guys, thank you for viewing this. Appreciate it. We're going to post all the links to all the software that Tom uses. We're also going to post his journal on our site that he has, and he tries to put when he has the time. His trades and his thoughts, and you can ask him any questions you want over there. So until next time, I wish you all the best, and I'd love to earn your business at Optimus Futures. Take care. Bye.